Good morning, everyone. Welcome back to this session on advanced accounting. So as we discussed, today we plan to cover a new topic, which is about amalgamation. In terms of this topic on amalgamation, the relevant accounting standard is AS 15. So now in terms of amalgamation, we'll be discussing all the things, some of the accounting requirements which are there in respect of amalgamation. And what AS 14 talks about it means how the account is required to be done in respect of amalgamation. Okay, I would say an important topic, and it involves detailed illustrations also. So this should be helpful. I'm just hoping that you are all prepared for this. All right. So now moving on to amalgamation. In case of an amalgamation, let's try to understand as to what is the structure. What is this transaction on amalgamation? Yeah, basis which will then be able to understand as to how its accounting requirement is really required to be done. So just give me a minute. I'll just share one file. All right. So now let's try to understand as to what is an amalgamation. So we can say amalgamation largely is of three types. Okay. So for the purposes of our accounting requirement only. So one is wherein there are two companies. Okay. So now there is a company A Limited and there is another company B Limited. So now what will happen? So let's suppose A Limited plans to acquire B Limited in a way that after the acquisition, existence of B Limited will not remain anymore. Okay, so in a way, what will happen? After the acquisition, this B Limited will get merged with A Limited. Okay, so this B Limited will get merged with A Limited. So on a standalone basis, the existence of B Limited will not be there anymore. Why? Because this company B Limited will not be there. This will get absorbed with A Limited. Okay, so all the businesses which would be there in B Limited, all the assets, all the liabilities, everything in respect of B Limited will move to the books of A Limited. Yeah, so this is, you can say, one type that we are going to discuss today. And this is, in technical terms, is called as absorption. Absorption. Absorption means wherein one of the business is getting merged with another business. And one of the business and the other business has to be two separate companies before we get into this structure. Okay. Now, the other part is, or you can say the other type could be wherein there are, let's suppose, two companies, B Limited and C Limited. Okay. Now they get merged into a company which is A Limited. They get merged into a company A Limited, or you can say it could be BC Limited. Yeah. So whatever be the nomenclature. Now in this case, again, what is happening? This B and this C, both these companies will not remain there anymore. Their businesses, their assets, their liabilities, they will all get merged with A Limited. So as far as the businesses of B and C are concerned, so that will continue. So we are not saying that the business will not continue, but the separate legal existence of these two companies come to an end. This is what you call as amalgamation. Okay. Now, similarly, there could be another structure wherein, let's suppose, A Limited was not there earlier. A Limited has been created as a new entity. So in this example, A Limited existed, but let's suppose if A Limited is created, it's a new entity which has been created. Why? To merge B and C in A. So that is what you call as external reconstruction. So that is again one of its types. Okay. So now all of these situations that we have discussed will get covered under our accounting requirements for today. Okay, so that will get covered under our accounting requirements for today in the form of amalgamation only. So don't get confused, sir. Will this absorption, with this external reconstruction, all of these things, will they be also called as amalgamation? So you can say these are all types, okay, with a different nomenclature for the purposes of our understanding only. Now, there is another type of acquisition which is possible. So let's discuss that. So let's suppose A Limited and B Limited. So there were two entities. Okay. Now what A Limited has done is A Limited acquires, say, 100% shares of B Limited. Now in this case, B Limited will not get merged with A Limited. B Limited as a separate legal entity will continue. Okay. B Limited as a separate legal entity will continue. But now it's fully acquired, or you can say it's acquired by A Limited. So this is what you call as acquisition. Okay, whereby, and this is something which we'll discuss in the later sessions when we will be covering consolidation. So now in this situation, B Limited becomes subsidiary of A Limited. So now this type of transaction, or you can say this type of arrangement, is not covered by AS 14. Okay. So this type of arrangement is not covered by AS 14. So that means under AS 14, or for the purposes of amalgamation, one of the company will have to come to an end in terms of its business, in terms of its assets and liabilities. But all of those businesses, assets and liabilities will continue with some other company. Okay. Now, moving further on this. So there are some terms which are important for us to understand. Now, we are going back to the transaction wherein one company is there and the other company will come to an end. Then we have A Limited and let's suppose B Limited again. Okay, so we are taking these two examples once again. Now the question arises as to why this is done. Why would a company get into amalgamation? What is the benefit? See, there could be a lot of benefits which a company may want to achieve out of this. Now, those benefits could be in terms of economies of scale, or in terms of expansion, yeah, or in terms of leveraging on the technology which one of the companies may be having, other company may not be having, yeah. So that is why all of these acquisitions, so you can say it's a kind of business acquisition which happens. So that is why all of these types of acquisitions take place, yeah. But in terms of these acquisitions, one acquisition or one type of acquisition which I have discussed with you is not covered under our accounting requirements for amalgamation. So now there are few terms which we need to understand and which we are to use repeatedly. So that's why it's very, very important that we understand these terms. If you have any questions, any doubts around those terms, please ask questions. Okay. So now A Limited is acquiring the business of B Limited. Okay, so you can say it's an arrangement wherein A Limited will acquire B Limited, and after that B Limited will come to an end. So business of B Limited will continue. Okay, assets and liabilities of B Limited will get shifted to A Limited. Now you may have a question that when the assets and liabilities will get shifted to A Limited, at what values they will be shifted. So that part we will cover slightly later. So as of now, we are just trying to understand the concept. Now in this case, there is a company which gets transferred. Can you tell me which company is that which will get transferred in our arrangement? In our arrangement, which company gets transferred quickly? In our arrangement, which of these companies will get transferred quickly? Over to you. Yeah, very good. Kiran, Sunil, they are saying B Limited. Now, this company which is going to get transferred is called as transferor. Is called as transferor, or you can say transferor company. There is another term for this, vendor, or you can say vendor company. So you can say transfer company, vendor company. Yeah. Now, B Limited will get transferred to A Limited. Yeah. B Limited will get merged with A Limited. So that's why A Limited, for the purposes of our accounting requirements, will be termed as transferee. Okay. Transferee company means the company wherein the transfer company will come and get merged. Okay. Or you can say the company which will acquire the other company. And this is also called as vendee company. This is also called as purchasing company, means the company which is purchasing the other company. Okay. Purchasing company. Yeah. So these are the terms which you need to remember. So every time there is a confusion as to who is the transferor, who is the transferee, who is the vendor, who is the vendee. So that's why it's very, very important for us to remember these terms. Okay. Now I have a question from Malappa Jadar. He's asking, sir, what is the difference between absorption and amalgamation? I'll just quickly let you know. So we have discussed this. See, absorption means wherein in this arrangement, if you look at B Limited will get merged with A Limited. Okay, so there is one company B, this will get merged with A. So this is what you call as absorption. Amalgamation, wherein there are two companies B and C, they get merged with another company, A Limited. Or you can say they become BC Limited. So B and C, they get merged. It becomes BC, or let's suppose A Limited. Okay, so in case of amalgamation, effectively there are three companies. In case of absorption, there are two companies. But for the purpose of our accounting requirement, we'll call all of these types as amalgamation only. So if in the question it says the company amalgamated or deal with the requirements of amalgamation, or it's a case of amalgamation or not. So please don't get confused that it is amalgamation and absorption. So these are two different terms, different different requirements of accounting will be there. No. Yeah. So please remember that. Please try to go ahead with the same understanding, because for our accounting requirements, things will remain same. Okay. So now, any questions, any doubts if you have on this further? Any questions, any doubts on this? Please let me know, and let me just create some of the situations which you need to answer. Okay. So let's suppose there is a company AB Limited and there is a company CD Limited. Okay. Now this company gets merged. These two companies effectively they get merged and it becomes ABCD Limited. All right. So this becomes ABCD Limited. So in this example, can you tell me which company will be the transferee company out of these three? Which company will be the transferee company? Yes, quickly, over to you. Which company will be the transferee company? Which company will be the transferee? Okay, so Kiran, Pratima, they are saying ABCD. What about others? Pooja, Rashmi, great. Yeah. So I think transferee company is clear. Now, can you tell me which company out of these will be termed as purchasing company? Which company will be termed as purchasing company? I think Sangeetvani has also answered ABCD. Srinivasan is also saying ABCD. Which company is purchasing company? Jayanto, Rashmi, they are saying it's ABCD. Kiran has got the same answer. Great. Yeah. So now, can you tell me in this example, the next question? I think Preeti, Unikrishnan, they have also answered. Harish has got the same answer. Okay. So now the next question. In this example, do we have only one vendor company or more than one? And if that is one, what is the name of that vendor company? If that is more than one, what are the names of those vendor companies? Okay. Yes. Over to you. Vendor company or companies, whatever be the case. Okay, Kiran is saying there are two, AB and CD. And same is the response from Pratima, Kiran, Sunil, Rashmi. What about others? I think Priya answered the previous one. Okay, Rashmi is saying it's more than one, AB and CD. Sitkala is saying in amalgamation, all the companies cross the existence and merge to form a new company. Is this correct? Yes. Okay, Kritika is saying the same thing. Great. Preeti is saying two. Very good. I think Priya has got the same answer and Shivanna has got the same answer. Okay, great. So I think this part is now understood by everyone as to what is amalgamation, what all types of amalgamation are there in terms of the structuring of the, or you can say the arrangement which is going to arise. Now, for the purposes of our accounting requirement, amalgamation could again be segregated into two types. So I'll come to that part, but before that, let's try to understand some of the technical requirements. Okay. Now, as we discussed, whether it is about absorption, whether it is about amalgamation, yeah. So you will not differentiate between all of these things. You will just understand that one or maybe more than one company is coming to an end and it is getting merged with another company, and that is what we'll call as amalgamation. Okay. Now, for the purposes of the accounting requirements, now we will move on to the accounting requirements. For the purposes of the accounting requirements, amalgamation could be of two types. One which is in the nature of merger and the other one which is in the nature of purchase. Okay, so now I am discussing an important part because this is going to be important, because now we'll be looking at the accounting requirements in the books of transferee. We'll also be talking about the accounting requirements in the books of transfer. But please remember, when it comes to AS 14, okay, so when it comes to AS 14, AS 14 deals with the accounting to be made in the books of transferee company. Transferee company. Okay, in a way that the business which is purchased by the transferee company or the purchasing company. So what is going to be the overall accounting requirement which the transferee company will have to follow? But as a part of our discussion, will not be limited to the transferee company. We'll also be closing the books of the transfer company, because transfer company is also going to come to an end. Yeah. So in the question, you will also be asked as to how do you close the books of transfer company? What are the journal entries you will be required to close the books of transfer company? Yeah. So there are a lot of things which are going to be discussed. So all of these aspects we are going to cover. But before that, as we discussed, we now need to segregate amalgamation into two parts. And what are those two parts? Amalgamation is of two types. One which is in the nature of merger, other one which is in the nature of purchase. Okay. Now, depending on the type of amalgamation, means if it is in the nature of merger, then its accounting requirement will be different. If it is in the nature of purchase, then its accounting requirement will be different. Okay, so you can say for both these types, accounting requirement is going to be different. Yeah. Now the question arises as to why there are two types of amalgamations for the purposes of accounting requirement. So let's try to understand that, and then we'll talk about the accounting requirement also. Now, What is an amalgamation which is in the nature of merger? See, just to keep it simple, there are few conditions which will be required to look at. Okay. And you can just keep it very, very simple. Why? Because every time there is a requirement in the question for amalgamation. And if let's suppose the question is silent as around the type of amalgamation it is, means the question doesn't speak, whether it is in the nature of merger or in the nature of purchase. So what will you be required to do? You will have to get on to those conditions that we are going to discuss. Okay. With the help of those conditions, you will be able to make out as to whether it will be in the nature of merger or purchase. Yeah. So I can definitely get on to those conditions also, but before those conditions, which is a kind of checklist for you to look at, I think it's also important if you understand conceptually that what does it mean in terms of merger? Why is it really called as an amalgamation in the nature of merger as against purchase? Okay. So now let's try to understand this concept. See, when we talk about amalgamation in the nature of merger, so you can say it's an arrangement wherein two parties come together, or maybe more than two parties come together. When I'm talking about parties, it's about companies only, because amalgamation is applicable only in case of companies. Okay. So now, when two companies come together and they genuinely pool not only their assets and liabilities, but they also pool the interest of the shareholders. They also want to put together the businesses. Yeah. Means you can say there is a kind of genuine merger. Merger, you can say it's a mix up wherein all of these things will come together in a genuine manner. Whereas, if you look at amalgamation in the nature of purchase, okay, if you look at amalgamation in the nature of purchase, now, what is this amalgamation in the nature of purchase? Which are in effect a mode by which one company acquires another company, and as a consequence of this acquisition, shareholders of the company which is acquired, means shareholders of the acquired company, or you can say transferor company, normally do not continue to have proportionate shares in the equity of the merged company. Or you can say the business of the company which is acquired is not intended to be continued. Okay, wherein it's more about acquiring the company and finishing off. For example, let's suppose there's a company. Now this company wants to finish the competition in the market. So what it will do is it will acquire its competitor. Okay, and will get done away with the business which the competitor was doing. But because the competitor is acquired, so that's why all the assets, liabilities, everything in relation to that competitor will come to this transferee company. Okay. So this is more about the concept. But for our purposes, we can just make it simple. For the purposes of solving question, for the purposes of our further assessment as to whether it is in the nature of merger or purchase. So the standard says, if the amalgamation is in the nature of merger, then it should satisfy all the following conditions. Now, this part I would say is very important for everyone. Okay, so you should understand these conditions carefully. In case of merger, or you can say amalgamation, which is in the nature of merger, what are these conditions? And please remember, all the conditions are required to be satisfied. So there are 5 conditions. We cannot say that, okay, 4 conditions are satisfied, so it will become merger. 3 conditions are satisfied, 1 condition is satisfied. No, all the 5 will have to be satisfied. So what are those conditions? all the assets and liabilities of the transferor company become, after amalgamation, assets and liabilities of the transferee company. Means for the transfer company, all of its assets and liabilities will have to move to transferee company. All means 100%. Okay. Shareholders holding not less than 90% of the face value of equity shares of transfer company. Okay, means 90% shareholders of transfer company. If you remember in our example, if it is B Limited and it is B Limited, wherein A acquires B, A acquires B. So B will become the transferor company. Please remember, B becomes the transfer company. So now in this case, it says 90% shareholders of B. Okay. They should. Okay. So shareholders holding 90% of face value of equity shares of transfer company means 90% shareholders of B become equity shareholders of A Limited. Okay. So now this is the number which is at least. So it has to be 90% or more. Yeah. So now in this case, it would be 91, 92, but at least 90% of shareholders of B should continue as shareholders of A now. Okay. So let's suppose if it says that only 80% will continue. Yeah, remaining 20 will go. So will it remain an amalgamation in the nature of merger? Tell me. So if let's suppose only 80% continue, so do you think it will be an amalgamation in the nature of merger? Quickly, over to you. What do you think? Okay, Pooja is saying no. What about others? Sitkala is saying no. Okay, Sento is also saying no. Yeah, very good. Why? Because as we discussed, all the conditions will have to be satisfied. It's not only one. Okay, now the next step or the next condition. The consideration for amalgamation receivable by those equity shareholders of the transfer company. Now, what was the transfer company in our example? B Limited. So I'll just put down this part again because this will give you clarity. Okay, so the consideration for the amalgamation receivable by equity shareholders of B Limited who agreed to become equity shareholders of the transferee company means A Limited is discharged by A Limited only by issue of equity shares in A Limited, except that cash may be paid in respect of fractional shares. So now in this case, it says that in the previous condition, when we were talking about at least 90% shareholders of B who will also become the shareholders of A, now they will get some consideration. Yeah. So what do you mean by consideration? Now, shareholders of B before this amalgamation, okay, they were the owners of a company. Now, if B is coming to an end, if B is getting merged with A, so these shareholders will want some money. Yes or no? They will want some money for this amalgamation to be carried out. Okay. So now this money or this consideration, now money could be in the form of cash or say non-cash. So that is what you call as consideration. Okay. Means the amount which is going to be paid to the shareholders of B. So now this consideration has to be in the form of equity shares of A Limited. Means as against the equity shares of B Limited, which those shareholders of B Limited were holding, they will now get the equity shares of A Limited. Yeah, but in some cases, some fraction could arise because every time when the share will be issued, it has to be at least one. If let's suppose it becomes half, why? Because the consideration amount is such. So for that fraction part, cash may be paid. Otherwise, cash should not be paid. Otherwise, it has to be through issuance of equity shares only. Okay. Now, the next condition, business of the transfer company is intended to be carried on. Now, this is very important. Huh? Business of B Limited should be carried on by A Limited. Okay. Next and the last condition, no adjustment is intended to be made to the book values of assets and liabilities of B Limited when they are incorporated in the financial statements of A Limited. So now this is going to be a very, very important aspect through which you will be able to mostly understand whether it's an amalgamation in the nature of merger or not. So what does it say? See, merger you can say is a type of amalgamation wherein these two companies are genuinely coming together. They just want to merge their business so that the business gets expanded. And the idea is to really expand. Why? Because that is why the business of B is required to be continued. Because when it comes to an amalgamation in the nature of purchase, therein A may or may not continue with the business of B. So B will come to an end. Its assets and liabilities will also come to A, but that business may or may not continue. So that is what you call as business in the amalgamation in the nature of purchase. So now in this situation, for this amalgamation to become a genuine merger, what is required? It is required that the assets and liabilities which were recorded in the books of B Limited, they continue to move at the same book values. So how will they continue to move at the same book values? When they are mixed in the books of A Limited at same book values at which they were appearing in the books of B Limited. Okay, so that is what you call a real merger as, or you can say amalgamation in the nature of merger. Clear on this? Yeah. So these are the 5 conditions which a company will have to check every time, or you can say in the arrangement we'll have to check every time for that arrangement to be called as arrangement in the nature of merger. So I think Pooja has a query. Pooja is saying sir, transferee company को transfer company का cash भी लेना compulsory है merger के लिए. See, when you are talking about transferee company, so when we talk about transferee company, so it's like for the transferee company, all the assets and liabilities of the transfer company will have to move. Yeah. But please understand that for all these assets and liabilities to move, there's one part, and that part is that transfer company will have to close its books. Okay, will have to close its books so that it can get merged with the transferee company. Now, for the purposes of this closure, some of the transactions may arise, which may require utilization of some amount of cash. That we'll discuss. Okay, that part we'll discuss as to how that is required to be dealt with. Understood? So when we'll discuss some illustrations, some questions, you will get some more clarity around it. Okay. Okay, then Kiran is asking, less than 90% of shareholders cannot become the shareholders of transferee company. No, they can become. They can become, but in such a situation, it will not be an amalgamation in the nature of merger. Then what would it become? It will become amalgamation in the nature of purchase. Now, please remember that for the amalgamation in the nature of merger, all the 5 conditions have to be fulfilled. If any of them is not fulfilled, then what do you call it as? You will call it as amalgamation in the nature of purchase. Yeah. So this is what amalgamation in the nature of purchase specifies. So it says an amalgamation which does not meet any one or more of the conditions which we have discussed. What do you call it as? Amalgamation in the nature of purchase. Okay. Yeah. Now, I can see some of the questions coming in. Okay, so now Kiran is asking, sir, 5th point is not understood. Sure. So let's get back to the 5th condition. So the 5th condition says, when assets and liabilities of B Limited, Okay, in our example, B Limited is the transfer. So when they will shift to A, these assets and liabilities should move to A at their book values. Means no change to that value should be made. However, for this merger to happen, it is important that the accounting policies of A and B should be aligned. Okay, for this mix-up means wherein both these entities are getting merged. So it is important that the accounting policies of A and B are aligned. But because these were two separate entities, so it is possible that B may be following some different accounting policies as compared to A. Yes or no? So that's why before this merger, B may be required to align its accounting policies with that of A. And for alignment of those accounting policies only, some of the changes in the book values of assets and liabilities of B may be required to be made. Otherwise, no change in the book values should be made. So it says, except to ensure uniformity of accounting policies. Okay. Now, next question comes from Harish. Harish is asking, but if the asset and liabilities is revalued at the time of amalgamation, whether it is recorded at book value? No. Then it will not be recorded at book value. Then it will be a case of amalgamation in the nature of purchase. Okay. And I think you will get some more clarity around it. As we'll discuss questions, I think you will get some more clarity. Okay. Rashmi is asking, sir, if the transferor company has not up to, transfer means you are talking about B. So if the B Limited has not up to 90% shareholders, when you say up to means you are saying less than 90. Then how to fulfill 90% conditions? Then that will not get fulfilled. Okay, so that will not get fulfilled. So see, in the question, it is not that you will be required to satisfy this condition. You will have to only check whether this condition is fulfilled or not. Why? Because if this condition is not fulfilled, so what will happen? You will call it as amalgamation in the nature of purchase, and you will do the accounting in a different manner. Okay, so every time you will not be required to prove that somehow you need to make it amalgamation in the nature of merger. That is not the objective. Okay. Preeti is asking, so revalue hoga ya realized? See, revalue is about changing the values of the assets and liabilities of B Limited, or you can say the transferor company. Okay, so that is not called as realized. That is called as revaluation. We'll talk about that part also. Okay. Unni Krishnan is asking whether entire assets and liabilities to be transferred to become merger if some assets have not got transferred. So I think I can understand your concern. So please hold this query for some time. When we'll be discussing questions, I think you will automatically get answers to this. Okay, don't worry. Unni Krishnan is asking 10% equity shareholders of the transfer company agree for preference shares or debentures or cash. Is it fine for the merger? See, in this case, you have only spoken about 10%. Okay. In this case, you have only spoken about 10%. But please remember, what is our requirement? Our requirement is to check for at least 90%. Okay. At least 90%. So therefore, when you are only checking for 10, what about 90? So that is something you need to find out. Okay. Now I am just reading this condition again. So it says shareholders holding not less than 90% of the face value of equity shares of B Limited. B means transfer company, other than equity shares already held therein immediately before amalgamation by the transferee company or its subsidiaries or their nominees become equity shareholders of the transferee company means A Limited means at least 90% equity shareholders of B Limited have to continue as equity shareholders of A Limited. Okay, clear on this? Yeah. All right. So now, for the purposes of accounting requirement, there are two methods for accounting. What are those two methods? Pooling of interest method and purchase method. Now, this method, pooling of interest, will apply to amalgamation, which is in the nature of merger. And this method of purchase will apply to amalgamation, which is in the nature of purchase. Okay, so please remember this always. Now, how will that accounting be done? What differences are going to be there in terms of accounting requirement? All those things we'll discuss. Okay, so we're just moving step by step. Fine. Yeah. Any questions so far? Any more doubts if you have? Tell me. Any more questions? Any more doubts if you have? Quickly. Okay, Sento saying no. So I'm just hoping everything is clear. Kiran is asking acquisition example. See, all of these examples we have been discussing. Yeah, they are in relation to amalgamation. Acquisition, you should just ignore. So you just understand as to what is amalgamation and accordingly deal with the accounting requirements. Okay. Because acquisition is not dealt by amalgamation only. Okay. RN is asking merger and purchase में क्या difference है? See, we have discussed there are a lot of differences. Differences are what? The conditions. So any arrangement which doesn't fulfill all these conditions, what do you call it as? Amalgamation in the nature of merger. Okay. And anyone which doesn't satisfy any of these conditions, what do you call it as? Amalgamation in the nature of purchase. Yeah. Okay. So now I think Srinivasan is asking how merger is different from consolidation of financial statements. See, these two are completely different things. In case of a merger, out of two companies, one company is coming to an end. But in case of consolidation, both two companies continue as a separate legal entities. Okay, so that's the difference. Understood? But when it comes to a consolidation arrangement, that is not covered by amalgamation. Fine. So now we will now discuss the accounting requirements. Okay, now we will be discussing the accounting requirements as to what accounting is required to be done in the case of pooling of interest method, means which is required to be done when it is amalgamation in the nature of merger, and what accounting is required to be done under purchase method, means when it is amalgamation in the nature of purchase. Now, every time you'll have to remember, every time you'll have to remember, where do you use pooling of interest method? In case of merger. Where do you use purchase method? In case of amalgamation in the nature of purchase. Okay. So don't mix up these things. Otherwise, it will become complicated. Okay. Otherwise, it will become complicated. Okay. So now, as a next step, we will discuss the consideration. We will discuss the consideration. Now, what is consideration? We just discussed briefly on the consideration. Consideration means aggregate of shares, any other securities, any payment which is made in the form of cash or any other asset by the transferee company to the shareholders of transferor company. So let's try to understand this with the help of an example. Say this is A Limited and this is B Limited. Okay. Now B Limited has got shareholders. Okay. B Limited has got shareholders. Now, in this arrangement, B Limited will get merged with A Limited. means after this arrangement, the existence of B will not be there. B will not be there. So what will happen to the shareholders of B Limited? Prior to this arrangement, these shareholders were the owners of a company. Yes or no? They were the owners of a company. That company may be making profits, that company may be generating revenues, that company may be having a total net worth. Yeah. So they had some value in terms of owning this company. Yeah. But now when this company will come to an end, now when this company gets acquired by A, what will happen to these shareholders? They will want something in return or not? Tell me, will they want something in return? Yes or no? Yeah. Now, this return which these shareholders expect, this return which these shareholders expect from A Limited. Why A Limited? Why would A be required to pay anything to shareholders of B Limited? Or why should shareholders of B Limited expect anything from A Limited? Because B is coming to an end. And who is acquiring that? B, sorry, A. A is acquiring that. So that's why in this arrangement, what will happen? A will have to make payment to these shareholders. In return for acquiring B, A will be required to make payment to these shareholders. Okay. So let's suppose you hold a company. Yeah. So let's suppose you have a company. Yeah. I come and acquire your company. So will you want something from me or not? Yes or no? So that amount which I'll pay to you, what do you call it as? That is called as consideration. This is called as consideration. So consideration, you can say, is a payment which A will make to shareholders of B. Okay. Now, this consideration may be of various types. This may involve cash. This may involve equity shares of A Limited. This may involve some other securities of A Limited. This may involve some assets of A Limited. Yeah, so this payment could be made by various methods, by various modes. So now all of those modes we'll discuss, but principally this is what you call as consideration. Okay, clear on this part? What do you mean by consideration? Yeah, any questions on the consideration? Now, please don't get confused, sir, that for the purposes of merger, consideration has to be in the form of equity shareholders. For purchase, it has to be in some other form. What if there is a cash? What if there is other assets? What if there are other securities? As we discussed, you need to, for the timing, keep it very, very simple. Consideration means transferee company will be making payment to shareholders of transfer company. So that is what you call as consideration. Okay. Okay. So I think I have a question from Kiran. So Kiran is asking, if B Limited is not coming to an end and remains after merger and becomes equity shareholder of transferee, then why would the consideration be given? See, this arrangement or this question which have you asked me. Okay, so the arrangement in the question which you have asked me, this will not get covered under amalgamation. Why? Because if the B Limited will not come to an end, then that will not become amalgamation. In case of amalgamation, B has to come to an end. So if you'll say that B as a separate legal entity will continue, then what would it become? It would become acquisition, which is not covered by amalgamation. Please remember, we discussed that. Okay, we discussed that. Okay, clear on this, Kiran? Very good. All right. Any more questions on this? Any more questions? Then we'll discuss some examples. Okay, so now as a next step, what we will do is we'll just pick up some examples. In those examples, we'll try to compute the consideration. We'll try to discuss as to how the consideration is required to be computed. What are the various ways or what are the various forms through which this consideration is required to be computed. So I think some of your questions as around the consideration should automatically get resolved once we'll cover that. Okay. Yeah. All right. So now I'll just get on to those questions. Just give me a minute. All right. So now you may look at this question, and in this question, please remember, we will be required to compute the amount of consideration. Okay. So all of these questions that we are going to discuss now will be all about computation of consideration. So don't worry about accounting requirement, that whether it is amalgamation in the nature of merger or purchase. Don't worry about it. Okay. Just keep it simple. Just keep it in a way that we are required to compute the consideration. Okay. So some of you may have a query, I think. Yes, so I think Srinivasan is asking, sir, consideration includes only assets and not liability. Of course, see, if let's suppose you are required to make a payment to someone. Okay, so let's suppose if I acquire your company. So for acquiring your company, will I give you asset or a liability? Tell me. Of course, I'll have to give you an asset. On a net basis, I'll have to give you an asset. Yes or no? Preeti is asking, sir, in the nature of purchase, shareholders get something from the Wendy company. What about board of directors? See, board of directors are the employees. They are not the shareholders. In a company, there are so many people who are involved. Board of directors are there, employees are there. Yes, CFO could be there, CEO could be there. There are a lot of people. Now, they are not the owners of the company. If I go and buy something, where will I buy it from? From the owners or from everyone? Tell me, Preeti. If I go and buy something, let's suppose if I go and buy a laptop. So where will I buy this laptop from? From the owners or someone else? From the owners only? Yes or no? So if I'll buy from the owners, to whom will I be required to make the payment to? To the owners only. Yeah. So that's why you should not worry about all other persons as to what will happen to them. Okay, so that is not a part of our discussion for today. We'll only be bothered about the owners. And who are the owners of the company? Shareholders. Okay, so that's why you should limit your worry only to the shareholders. Understood, Preeti? Clear on this? Quickly, then we'll move on to this question. Yeah, clear? Okay, great. So let's look at this question now. S limited is absorbed by P limited. So in this question, can you tell me who is the transferor and who is the transferee? Quickly. S is absorbed by P. Tell me quickly, who is the transferor, who is the transferee? Quickly, who is the transferor, who is the transferee? So Kiran is saying S is the transferor, P is the transferee. Okay, Sitkala is saying S is a transferor. Okay, I think Preeti is now clear on that. Okay, Sento is saying S is the transferor. Yeah, I think same is the response from Rashmi also. Very good. So I'm just hoping that you are clear on this. Kiran is saying S is the vendor, P is the vendee. Okay, great. So now S is absorbed by P limited. So what does it mean? S will come to an end and P will continue. Okay. S gives following information on the date of absorption. So sundry assets of S are given. Its share capital is given. Preference share capital is 2 lakh. Equity share capital 5 lakh. Reserves are given. Then this also had some liabilities in the form of debentures, trade payable. Okay. Then the additional information is also given. What is the additional information? P limited has agreed. So what does it agree? to issue 9% preference shares of rupees 100 each in the ratio of 3 shares of P for 4 preference shares in S. So I think this is about consideration. So now for this settlement, why this settlement? Because P is acquiring S. P is acquiring S. So P will be required to pay something. Yeah. So for this settlement, P will issue 9% preference shares. 9% preference shares in a ratio which is given to us. P has agreed to issue to the debenture holders in S Limited 8% mortgage at rupees 96 in lieu of 6% debentures in S Limited, which are to be redeemed at a premium of 20%. Okay. So the debentures of S Limited will also be paid off. Okay. Then it says to pay rupees 20 per share in cash and to issue 6 equity shares of rupees 100 each at a market value of rupees 125 in lieu of every 5 shares held in S Limited. Okay. So this is the third sort of arrangement, and to assume the liability to trade payable. Okay. So these liabilities will also be paid off by P Limited. Okay. Then it says you are required to calculate purchase consideration. So in this question, what is it that you are required to do? You are required to compute the amount of purchase consideration. So over to you. See, I would request everyone to please start solving all of these questions. Okay. So all of these questions that we are going to pick up, I will also be solving these questions. But please understand, we are currently revising all of these concepts. So it will be great if you start solving on your questions. And don't worry if you are getting wrong in terms of the solution. So it doesn't matter. It's important that you practice questions. Okay. Yeah. So now you can start solving this. I'll take a pause of maybe 1 or 2 minutes and then I'll start the solution. But please don't follow me in terms of my solution. If you are just solving this, just continue with your solution. And then you can compare maybe at the end as to, if you were solving it correctly, which I'm sure most of you will be doing. But if by chance, in some of the cases, if you are not able to do that, you will be able to understand, as to where was it that some changes were required. Okay. Through which you can just get onto the correct solution also. Okay. So I'm just hoping that you have started solving this. Now in this example, please remember there are 4 ways through which this settlement has been specified. So you'll have to first of all consider that when it comes to the purchase consideration, which all settlements will form part of your solution. Okay. Yeah. And which all settlements which will not form part of your solution. Why? Because we are not required to do the accounting in this case. We are only required to compute purchase consideration in this case. That's the only thing we are required to do. So I'm just hoping you have started solving this. Yeah. So it seems some of you have solved. No, so I think Preeti answered the previous one. Okay, great. All right. So now I'll also get on to the solution. Okay. But please, you may continue. And once you are done, please confirm you have done and start sharing your answer. Okay. You just need to tell me the amount of consideration. That's it. Okay. Now, in this case, we are required to compute the consideration, which is required to be paid by P to S. Now, this consideration will be given to the shareholders of S. Okay. So let's get on to the solution. Now, as we discussed, so this is S and this is P. Consideration is paid by P to S. So what does it mean? Consideration is paid to the shareholders of S. consideration will not go to S. Why? Because S will get merged with P. S will get merged with P. If you look at the entity or this company S, this will come to an end. So this will get merged with P. So that's why every time, what do you need to remember? This consideration will go out to the shareholders of S. So that's why what will happen? In this arrangement, if you look at this liability payment to the trade creditors and the settlement of the debenture holders, so should these two form part of the purchase consideration? The answer is no. Why? Because these two are the payments which are made to other than shareholders. Okay. So consideration excludes any amount payable to debenture holders. Understood? Understood? Clear on this? Yeah. I think Preeti has solved this. Okay. Preeti has also shared the response. Very good. Harish has also solved this. Very good. So now, so two amounts we have excluded. Now, preference shareholders. Are they the shareholders of the company? Yes. So that's why that will also become consideration. Equity shareholders. Are they the shareholders? Yes. So that will also become consideration. Okay. Kiran has also solved this. Okay. Kiran has shared it's 10 lakhs. Harish is saying 10 lakhs. Preeti is saying 991,667. Sure. So you can just understand now. Those who have solved, others, I would suggest keep solving this. Okay. So now, what does it say? It says that P Limited will issue 9% preference shares of rupees 100 each in the ratio of 3 shares of P for every 4 held. So how many shares were there with S? 2 lakh divided by 100. So 2000 shares were there. So 2000 shares were there. So 3 will be given for every 4 held. So 3 will be given for every 4 held. So 2000 divided by 4 into 3. So that is going to be the ratio into 100. So this becomes 1,50,000. So one form of consideration will be through preference shares. Now these preference shares will carry a coupon of 9%. So does it matter in terms of our computation? No, it doesn't matter. It doesn't matter. Okay. Now the next part. Next part it says rupees 20 per share will be paid in cash. Okay, great. So how many shares are there? 5 lakh divided by 100 means 5,000 into 20. 5,000 into 20. So 5,000 into 20, 1 lakh will be paid in cash. So this is the second form of consideration. Yeah. Okay. So I think Preeti is explaining. No worries, Preeti. It happens. Huh? Don't matter. It doesn't matter. Huh? So if your answer is not in line with what we are solving, it's absolutely okay. You just need to find out where do you need this course correction. Okay. Okay. Now the third mode, it says, sorry. So it says P Limited will issue 6 equity shares of rupees 100 each at a market value of rupees 125 in lieu of every 5 shares held. Means 1:5 will be the ratio. So how many equity shares were there? 5,000. So 5,000, 1:5 means 1,000 shares will be given at a market value of 125. Yeah. Yeah. And they will give 6 equity shares against, sorry, the ratio is 6:5. 6 as against 5 which are held. So for every 5 held, 6 will be given. So 5,000 divided by 5 into 6. Yeah, at a market value of 125. So means equivalent to 125. So this is going to be the consideration in the form of equity shares. So you can say the consideration in this case comprises of 3 elements. One, preference share. Second, equity shares. Third, cash. And the aggregate of these 3 Aggregate of these three, what do you call it as? Aggregate of these three, you will call it as purchase consideration. Okay, clear on this? Any questions on this? Over to you. Any questions around this? Any doubts if you have? Okay, Harish has a question. Okay, yeah. So Harish is asking, sir, if there is no debenture, if there is not any debenture holder in S Limited, but P Limited issued debentures to the equity shareholders of S Limited, will it form part of purchase consideration? Yes. Now, please try to understand. So it's a good question which Harish has raised. So let me just try to explain this part. Okay, and you should just try to understand this conceptually. Because once you'll understand the concept, I think some of these doubts which you may be having automatically will go. Now, please understand that this is S and this is P. Okay, and here what do you have? Shareholders of S. Yeah. So now, every time when you will make a payment to someone, every time when you will make a payment to someone, what should be the form of that payment? That should become an asset for the other party. Yeah. So that means P will give its assets to other party. Okay. Why I'm clarifying this point is because one of you asked me, sir, can P offer its liabilities to shareholders? That will not work. Why? Because at one place you are taking something from someone, and if you're taking something from someone, so will you pay him for that, or will you again take something from him? Because if you are offering him a liability, so it's like you are taking again something from him. Yes or no? So that doesn't work. Now, in that particular situation, if you look at this entire arrangement, so there are few preference shares which P has given to these shareholders. Okay. So now, when these shareholders will get preference shares of P, so for those shareholders, will those be treated as assets or a liability? Tell me. For these shareholders, the preference shares which P will give, will they be the assets for those shareholders or a liability? Tell me, what do you think? For those shareholders, whether those preference shares will be the assets or not. Over to you. Over to you. Kiran, Pratima, Pooja, they are saying, sir, yes, they will be assets. Why? Because if I am getting some preference shares, so that will become an asset for me. Yes or no? That will become an asset for me. I think Rashmi Preeti has got the same answer. Now, similarly, if you look at equity shares, these will also become assets for the shareholders. If you look at cash, that will also become asset for these shareholders. Why? Because on all of these instruments, whether you talk about preference shares, equity shares, or cash, shareholders are getting some economic benefit. Asset is what? Asset is something which provides some economic benefit to a person. Now, if P issues its debentures, if let's suppose P issues its debentures, so for P, debenture is a liability. For P, debenture is a liability. But if these debentures are issued to the shareholders, will they become a liability or an asset? Tell me. If these debentures are issued to the shareholders, so will they become an asset or a liability for the shareholders? Tell me. What do you think? Kiran is saying it will be an asset. Preeti is saying it will be an asset. Yes or no? Yeah. Pooja is saying it will be an asset. Yeah. So that's why every time when we will be talking about a consideration, what should the form of that consideration be? Asset for the shareholder. So if that is issued in the form of debentures to shareholders, for shareholders, that's an asset. So that should also be considered. Understood? Yeah. So I'm hoping, Harish, you are clear on this. Okay. So now over to this query of Preeti. So Preeti is saying, sir, anything which is received by shareholder, that will be the purchase consideration. So I can generally say yes, but of course you'll have to just, find out what do you mean by anything. Okay. So that anything has to be understood with this, sort of understanding which I've just shared with you. So that is how you need to look at it. Clear on this? Yeah. So this anything has to be clear. Huh? What do you call as anything? Fine. Clear? Everyone clear? Any questions? Any doubts on this? Any questions? Any doubts if you have? Please confirm. Clear on this? Then I'll pick up one more question. Huh? Any questions? Any doubts if you have? Okay, Preeti is saying clear. What about others? Everyone clear? Rashmi is saying debenture holders received consideration. Yes, that's the consideration. Huh? No, so if the debenture holders receive consideration, that will not form part of your overall consideration. Okay, so that's a separate thing. And in our example, you must have seen, okay, so the settlement of debenture holders was not forming part of consideration. Why? Because that is not going out to the shareholders. If Preeti is saying anything uh, related to assets, yes, of course. Okay, so with the concept that I've discussed with you, you need to just, move with this flow every time. Okay, Oni Krishnan is saying clear. Okay, so let's look at one more example. Let's look at one more example. Now, in this example, again, what we will try to do is, again, we will try to compute purchase consideration. Okay, again, we'll compute the purchase consideration. Okay, and now, once again, you will have to solve this. And I'll also be solving this, but I would suggest you solve this on your own and start sharing the response. Okay. So now everyone, before I really move on to this question, please confirm if you need a break here or should we really continue? Quickly, please confirm. Do you think we take a break or you think we should continue? Yes, quickly. Yes, tell me. Yeah. So what do you suggest? Yeah. Should we continue? Yeah. So Preeti, Pooja saying no break. Rashmi is saying no break. Saurav is saying no. So I think Pratima, Rashmi, Kiran, everyone is saying no break. Yeah. So I would also suggest, we are moving with the flow. You are getting things, and I'm just hoping you're sort of enjoying this discussion. So we should continue. Huh? And I think Punni is also saying let's not take a break. Yeah. So let's not take a break. Okay. So we'll continue. So we are given this balance sheet of X Limited as at 31st March X1. Yeah. Wherein the information is provided. Share capital is given, reserves, long-term borrowings are there, trade payables. Then we are also given the information around the assets of X Limited. Please remember, this is X Limited. Okay, because every time in the question, you'll have to understand that X Limited. And this information is at 31st March X1. Okay, 31st March X1. Now, in terms of assets, we have PPE, then inventory, trade receivables, cash and cash equivalent. And then the notes to accounts are also given, which sort of explains as to What is the breakup of this equity share capital, preference share capital? Then in terms of reserves that were there. So what do these reserves comprise of? These are all general reserves. Then there are long-term borrowings. Then split of PP is available. So it's land and building, plant and machinery, furniture. Then non-current investments are there. Okay. So non-current investments are the assets that the company had. Then inventory, trade receivable, cash and cash equivalent is also specified. Now, we are also given some other information. What is the other information available? Y Limited takes over X Limited. Okay, great. So now, what do we have? Y taking over X Limited. Okay. And when did this takeover happen? 10th April 2000 X1. Okay. Debenture holders of X Limited are discharged by Y at 10% premium by issuing 15% own debentures of Y. Means debenture holders of X will be settled by Y. Fine. Okay. Then it says preference shareholders of X. Who is X? Transferor company. So its preference shareholders are discharged at a premium of 20%. Means they will be getting value enhanced. Okay. So this enhanced value by 20% at a premium of 20%. Okay. But these preference shareholders, they will not be getting any cash. So they will be issued preference shares of Y Limited. Okay. Next, intrinsic value per share of X Limited is rupees 20. Intrinsic value per share of Y Limited is rupees 30. Now, in this question, you may get confused. Sir, what do you mean by intrinsic value? Okay, maybe that you don't understand this concept of intrinsic value. Should this really bother you? No. You should just simply consider that the value of share of X and Y is given to you. So in the exam, don't get confused by these terms, because as far as our solution is concerned, this doesn't have any relevance. The only relevant part is that we need to understand what is the value per share of X and Y, and that too will understand as to why that is required. Y Limited will issue equity shares to satisfy equity shareholders of X on the basis of intrinsic value. So what does it mean? Means this is the ratio which has been decided. Okay. This is the ratio which has been decided. Yeah. Okay. However, the entry should be made at par value only. The nominal value of each equity share of Y is rupees 10. So they are saying that this amount per share, this value per share, where do you need this? Only to compute the number of shares. Yeah. When the shares will actually be issued, they will be issued at par. What do you mean by par? Means at the face value of rupees 10, means there will be no premium or no discount. So that's the only thing. Okay. Clear on this? So now in this example, before we really get on to the solution, I think if you just let me know conceptually, I'm sure some of you may have started solving this, but if you could just let me know one part, that there are three modes of payment broadly, which Y will be required to make to X. So there are broadly three modes which Y will be required to make to shareholders of X. One is debentures, second is preference shares, third is equity shares. Out of these three, what do you think will form part of our consideration? Or do you think all three will form part of our consideration? I think this much concept you would have understood by now. Yes, over to you quickly. If you can just answer this. What do you think will form part of our consideration? Over to you. Over to you. What do you think will form part of our consideration? Quickly, out of these three. Sento is saying, sir, preference shares and equity shares will form part. Kiran is saying preference shares and equity shares. Okay, Pratima is saying third and fourth. Okay, Ritika is also giving the same answer. Pooja is saying debentures, this settlement of debenture holders, that will not form part of consideration. What about others? Preeti is saying only the preference shareholders and the equity shareholders. Saurav has got the same answer. What about others? Quickly. Preeti seems to have solved this. Okay, Preeti is saying the purchase consideration is 80 lakhs. Okay, Sitkala is saying third and fourth. Okay, great. So I think conceptually we are now clear on this as to what will form part of our consideration. Now, please remember in the exam, you get marks for the steps. So if you are clear on the concept, you will follow the steps. So that means you are scoring marks. So which means that even if you go wrong, let's suppose by chance, if there is some mistake in the calculation. So if you are clear conceptually, so you'll be getting substantial marks. Understood? Yeah. So I think same is the response from Pooja, Sumit, and Preeti. So let's get on to the solution now. Okay. Yeah. So now we'll be required to compute the purchase consideration. In the exam, when you will answer these questions, you will be clear what that settlement to preference shareholders, settlement to equity shareholders will form part of purchase consideration. And accordingly, you will be doing the calculations also. Yeah, which will form part of your solution. But please remember one component which is given in the question as around the settlement of the debenture holders, which you are clear on that it will not form part of your purchase consideration. And let's suppose if in the exam, you are computing your purchase consideration and you are excluding the debenture holder settlement from this. So let's suppose this forms part of your solution. Now, in this case, should you really clarify in your solution that the settlement to the debenture holders should not form part of the consideration? Yes. So you should clarify. Okay. So that the person who is evaluating this gets the clarity that it's not that you missed out on this point, or it's not that in your solution you have just partly solved this, but you have intentionally ignored that. Why? Because you knew conceptually that that should not form part of your purchase consideration. Okay. So such type of points you should also clarify. Clear? Yeah. Otherwise, it's all about computations. Yes or no? It's all about computations. Okay. So now, so it said that preference shareholders will be discharged at a premium of 20%. So let's look at the preference shareholders. So what was the amount of preference shares? So the amount of preference shares, we'll have to get onto the notes. That was, I think the numbers are in thousands. So that was 25 lakh. Okay, so you can just start solving this. So 25 lakh. Okay, so I'm just also solving this. 20% you add. So what does it become? 30 lakhs. Correct? So that will be first part. So 30 lakhs, but you will have to present the numbers in thousands. Okay. So this is the first part of purchase consideration. Okay. Now for the equity shareholders, you remember there was a ratio which was given. So what was the ratio? It said that per share value of X is what? 20. Per share value of Y is what? 30. Okay, so Y will issue equity shares to satisfy equity shareholders of X on the basis of this ratio only. On the basis of this ratio only. So now let's look at the number of shares of equity shareholders. So this is 7,50,000. 7,50,000. 7,50,000 divided by 30. Divided by 30 into 20. Into 20. Why? Because first of all, we'll reach the total value of X. So how do we reach the total value of X? 7,50,000 into 20. So that's the valuation of X. 7,50,000 into 20. So that's the valuation of X. Divided by 30. So that's the valuation of Y. Divided by 30. That's the valuation of Y. Okay. So now this is what will give you the number of shares. Okay. And those shares will be issued at par. So into 10. So what do you get? 50 lakhs. 50 lakhs. Or if you look at the number of shares, so it's going to be 5 lakh. It's going to be 5 lakh. Yeah. Clear on this? Any questions? So you can just understand. So whenever this purchase consideration will be required to be computed, so this question, though may be running into 1.5 page or maybe a full page or maybe 2 pages, the way it appears over here. But can you look at the solution? It's a small solution, okay, which is running into only 2 competitions. So there are only 2 competitions you are required to do, and that's it. You will get full marks. Okay. Yeah. So I can see a couple of queries coming in. Srinivasan is asking, so the value of share includes debentures also. Then why calculating purchase consideration? Why the debt is not included? See, when it comes to the value of shares, I think you are talking about the net worth of the company, or you are talking about the, I would say, I think you are talking about the value of the shareholders. Okay, so if this is the arrangement, in this arrangement, it appears as if you are saying that if someone will look at the valuation of this X, okay, so all of its assets, shareholders' wealth should be picked up, wherein you are absolutely right. But please remember, why will be required to settle various parties? Which parties are those? One is shareholders of X. Second is debenture holders of X. Okay. And various other holders who owe something from X, means various other liabilities of X. Now, for the purposes of consideration, we are saying the component which will go to shareholders, that will become consideration. So when the debenture holders will be settled by Y separately, so are the shareholders of X required to pay anything to those debenture holders of X Limited? No. Why? Because that is taken care of by Y separately. So Y is saying, I'll deal with those debenture holders. Don't worry. I'll take care of that liability. Don't worry. You are the owners. Ignore that liability, and ignoring that liability, whatever amount you want, I'll give you. Understood? Yeah. So we are looking at this component which will go out to the shareholders. Now clear on this? Clear? Okay, so this other query comes from Unni Krishnan. He is asking, sir, liabilities which are met by the transferee company in exchange of transfer assets may also form part of the consideration. I think my explanation to this question will again be the same thing. The same explanation you should consider. See, if let's suppose Y is paying some liabilities, whether that liability is in respect of a trade payable, whether that liability is in respect of a bank loan, whether that liability is in respect of a debenture, all of these are various forms of liabilities. Yes or no? Yeah. So we are saying that the owners of the company, they will not be required to pay these liabilities. Okay, they will not be required to pay these liabilities. But if they will not be required to pay these liabilities, does it mean that this amount is being paid to the shareholders? No. Why? Because this amount will be paid to all those debenture holders. It's correct that the shareholders will be free from making this payment, which is fine. But what is it that we are required to look at? The end amount which will reach these shareholders. Means what is it that these shareholders are going to get? Clear on this? What is it that these shareholders are going to get? Yeah. Srinivasan is saying, still, sir, there are some issues on this concept. It becomes debatable. So there is no point of debate. Huh? See, the only thing is that you need to get into this concept clearly. Okay. You can definitely may get into a situation wherein you are saying that, I have not understood the concept, which is fine. So you should look at some more examples. You should get into this concept in more detail, the way, we have discussed over here. But this is not debatable. Why? Because please understand, all of these requirements are coming from the established accounting principles. Yeah. So definitely we may have a different point of understanding, but you should try to understand as to what is it that is conceptually required to be done. So conceptually, the payment which you are required to make to these shareholders, we are saying that is what is called as consideration. Okay. So we have defined what is a consideration. So what is the consideration which will go out to the owners of the company? Clear? Clear on this? So Unni Krishnan is saying, sir, the preference shares are not the owners. Hence, a discharge of preference shares, how do that form part of the consideration? See, when it comes to the owners of the company, you are right that only the equity shareholders are the owners of the company. But as far as the Indian GAAP is concerned, preference shareholders are also considered as the shareholders of the company. Okay. Preference shares is not considered as a debt. Is that a loan as per our accounting requirements? No. So that's why we are considering these two. Please understand, huh? Because the preference shareholders are also considered as shareholders. So that's why we are considering these two. Now clear on this? Yeah. Clear on this? Saurav is saying one more example. Yes. So see, we'll discuss a lot more examples, huh? Wherein all of these things will keep coming up. So as we move further, we'll be discussing more and more examples. Don't worry. Yeah? Okay, Mohammed seems to be clear on this. All right. So now I think we can now move further. So let me just on to the next part. All right. So now moving further on to the next part. Yeah. So now consideration is what we have discussed. But as we'll move further, we'll be discussing the accounting requirements. So now let me just take you back to the accounting requirement. Please don't forget this point that we were talking about two types of amalgamation in the nature of merger, in the nature of purchase. Remember that? Yeah. So please come back to that point because we sort of moved from that point for the time being. And we also discussed that these two types will have different accounting requirements under pooling of interest method and under purchase method. Now we will get on to this accounting. Okay. So now as a next step, what are we doing? We will get on to this accounting of pooling of interest method as well as purchase method. And please remember this pooling of interest method is also called as merger method. Okay. Clear? Now, under the pooling of interest method, assets, liabilities, reserves of the transfer company are recorded by the transferee company at their existing carrying amounts. Okay, recorded at their existing carrying amount, except for some adjustments. What would those adjustments be? Which could be in relation to alignment of accounting policies. Remember this point? Yeah, except for this adjustment. So this was also the feature, if you remember, that the assets, liabilities of the transfer company have to move at their book values. What do you mean by book values? Existing carrying amount. If at the time of amalgamation, transfer and transferee companies have conflicting accounting policies, what do you need to do? You'll have to make them uniform. You'll have to align them. And for alignment of them, if any adjustments are required, those adjustments are required to be made in this existing carrying amount. And because of that, if the amount changes, you should not think that they are not moving at existing carrying amount. Okay, so that's an exception. That's an exception. Clear on this? So this is what is required to be done in pooling of interest method, which we'll discuss with the help of an example also. Now, when it comes to the purchase method, under the purchase method, the transferee company accounts for amalgamation either by incorporating assets and liabilities of the transferor company at their existing carrying amount, or at some other amount. Means under purchase method, assets and liabilities of the transferor company may move to the books of transferee company at existing carrying amount, the way we have discussed in case of method, merger method or pooling of interest method, or they may move at fair values or at some other value which may be agreed between two parties. Okay, so some changes in the value of assets and liabilities, some changes in the value of assets and liabilities of transferor company may arise in purchase method. Now, this is also the point of difference between two accounting methods. Please remember, this is also the point of difference between two methods. Okay, so every time you'll have to find out this aspect in the question. If the question is silent on this point, as to which method is this, which type of amalgamation is that. Okay, and how will you differentiate that? One, through those 5 conditions, and then through this aspect, which will be in line with those 5 conditions as we have discussed. Okay, clear on this? Yeah. In case of purchase method, there are few more things which are required to be looked at. In case of purchase method, all the reserves, if you go back, in pooling of interest method, we discussed assets, liabilities, and reserves of the transfer company are moving to the books of transferee at book value. But do you find that wording of reserves in case of purchase method? No. Why? Because in case of purchase method, the reserves of the transfer company will lose their identity. See, when it comes to pooling of interest method, all the reserves of the transfer company will carry their identity. Carry their identity means they will move as it is. They will remain as it is. They will not change. But when it comes to purchase method, those reserves will not remain reserves. they will get mixed up. They will get mixed up. They will lose their identity. Okay. They will lose their identity. Now, for the purposes of this aspect, that the identity of the reserves, which is not preserved, at times it may happen that there are some statutory reserves which were held in the books of transferor company. There are some statutory reserves which are in the books of transferor company. Now, how do you deal with those statutory reserves? Now, because those reserves are statutory in nature, so that's why it will not be possible that after this amalgamation is done, identity of this statutory reserves is not maintained. See, in case of pooling of interest method, this will not be a problem. This will not be a problem, but this problem may arise in case of amalgamation in the nature of purchase. So in that case, standard says that if there are some statutory reserves whose identity is required to be maintained even after the amalgamation, even after the amalgamation. So what do you need to do? You need to keep those reserves as it is. So you can carry those reserves as it is. But a contra adjustment to these reserves will have to be incorporated in the financial statements. And what is going to be that contra adjustment? Against every statutory reserve, because the reserve is going to have a credit balance. You can say a notional reserve is required to be created. What is that notional reserve? A reserve with a debit balance whose nomenclature will be amalgamation adjustment reserve. So what is the accounting entry that you will pass? To statutory reserve, to statutory reserve and debit amalgamation adjustment reserve. Let's suppose the amount of statutory reserve which needs to be carried was 100. So 100 will be this value, and we'll have to create this reserve with a debit balance amounting to 100. Okay. So when in the schedule of reserves and surplus, when you will go to the schedule in the financial statements, so what will happen? At one place, you will have a credit balance of statutory reserve 100. You will have a credit balance of statutory reserve 100, and you will also have a debit balance of 100 in the name of amalgamation adjustment reserve. So if you combine these two, it will become 0. So when eventually the obligation on the part of the company in respect of maintenance of this statutory reserve comes to an end. So let's suppose 5 years later. So today amalgamation has happened. Let's suppose 5 years later, the requirement to keep this statutory reserve comes to an end. Means the company can release this reserve. So at that point of time, what will happen? These two will get knocked off. Okay, statutory reserve will come to an end, and this debit balance of amalgamation adjustment reserve will also come to an end. Okay, so that is how you will make this 0. But till the time this statutory reserve will continue. Why? Because this identity needs to be maintained. You will also be required to keep this notional reserve balance in the financial statements. Clear on this? Clear on this part? Yeah. Other than that, there is another very important part. So let's look at that. So now, when it comes to amalgamation in the nature of purchase, okay, so we are talking about amalgamation in the nature of purchase. Yeah. There will be a purchase consideration which the company will compute, or you can say the transferee company will compute. Now, whenever we will do the accounting, whether it is in respect of amalgamation in the nature of merger or amalgamation in the nature of purchase, there are two things which will be required to be done. So let's try to understand those two things. See, B Limited is acquired by A Limited. So now every time what is required to be done? Books of B will have to be closed. At the time of amalgamation, B will have to close its books. Correct? And after the amalgamation, only A will continue with the merger of B. Means along with B, only A will continue. Yeah. So that means there are two requirements which a question may have. Now, not necessarily two, but two requirements are possible. One, to close the books of B. And second, to account for this amalgamation in the books of A. Means after amalgamation, A will continue. So to pass the journal entries for closure of B, to pass the journal entries for amalgamation of B with A, and to prepare the financial statements of A after amalgamation. Okay. So now when A will take over the business, when A will take over this B Limited as a whole, and when it comes to an amalgamation in the nature of purchase. So in this case, at one place, transferee company means A Limited. What would it do? It will compute purchase consideration. It will compute purchase consideration, which let's suppose is 1,000. Okay. Now, by paying this purchase consideration, A Limited will get assets of B Limited. So A Limited will get assets of B Limited. Let's suppose assets of B Limited are worth of 800. And A Limited will also take over liabilities of B Limited. Liabilities of B Limited. Let's suppose liabilities of B Limited were worth of, say, 200. So all in all, net amount, if you look at, what does it become? 600. 600. Correct? Now, in this case, A has made a payment to the shareholders of B amounting to 1,000. Amounting to 1,000. Correct? Amounting to 1,000. But against that, the value which A has received is equivalent to what? 600. So this is the value which A has received. Okay. So the differential means the excess amount which A has paid to the shareholders as against the value which A has derived is equivalent to what? 400. Can you tell me what do we call this 400 as? Over to you. Over to you. Mohammed is saying, sir, we call it as goodwill. What about others? Can you tell me what do you call this 400 as? Over to you. Quickly, everyone. Any thoughts from your side on this? Yes, quickly. Kiran is saying goodwill. Yes. Now, this excess amount which transferee company has paid, this is what we call as goodwill. And where will this goodwill be recorded? This goodwill will be recorded in the books of A Limited. Okay. Now, there could be another situation which may arise. I think I missed responses of Swaroop, Pooja, Unnikrishnan, Harish. They all answered. Very good. Okay, so now the next point. I think Saurav also answered the same. So let's suppose purchase consideration is 1,000. Similar, same amount. Let's suppose that is 1,000. But the net balance of assets and liabilities which have been taken over, let's suppose this becomes 1,200. So let's suppose instead of 600, let's suppose instead of 600, this is 1,200. Now, in this case, do we get the amount of goodwill? In this case, do you get goodwill in the question? Tell me, do you get goodwill? Mohammed is saying no. So what do you get? I think Kiran, Mohammed, yeah, they are saying no, sir. That will become capital reserve. Now, if it is other way around, what is this other way around? Let's suppose the amount which A has paid is lower than the value of net assets. What do you mean by net assets? Assets minus liabilities is lower than the amount of net assets which has been acquired. Say something like this, which is 200 negative. Then what do you call this 200 as? Then in such a situation, this 200 is termed as capital reserve. Okay, so every time in the question, you will have to be clear whether you are getting goodwill or capital reserve. And please remember one point, that this aspect of goodwill or capital reserve, where would it arise? This would arise only in case of purchase method. Only when the amalgamation is in the nature of purchase. Tell me one thing, if the amalgamation is in the nature of merger, if the amalgamation is in the nature of merger, if we are following pooling of interest method, do we get goodwill or capital reserve in that case? Over to you. Tell me quickly. Do we get goodwill or capital reserve in case of merger? Do we get goodwill or capital reserve in case of merger? Tell me quickly. No. Kiran, Saurabh, they are saying no. So where would all of these adjustments go? Mohammed, please understand. Where would all of these adjustments go? They will go to general reserve. Okay. All these adjustments, where will they go? They will go to general reserve. Now you may have a question, sir. What do you mean by these adjustments will go to general reserve? So you just understand the concept. Huh? Please understand the concept that in case of merger method, goodwill which we have discussed or the capital reserve which we have discussed, they will not arise. They will not arise. So if you will have any such difference, possible or not, in case of merger method, this difference is again possible. So where will you take it? Where will you take it? In case of merger method, okay, wherein you are following pooling of interest method. Where will you take it? You will take it to general reserve. Always. Okay. Yeah. You will take it to general reserve. Now, these are some of the principles you will have to remember always. Okay. So please understand that this is all about concept. So these are all the principles which you will have to remember always. Any questions, any doubts if you have on some of these things that we have discussed so far? Tell me any questions, any doubts as around this. Then we'll pick up one question. Huh? All right. Over to your questions, doubts that you may have. Vidushi is saying no. What about this? Mohammed seems to be clear on this. Very good. What about others? Any questions? Doubts? No? All right. So now, as a next, okay, Kiran has a question. Yes, Kiran, please go ahead with your question. Huh? Yes. Please feel free. Any questions, please let me know. Because after this, what we are going to do is we'll pick up one example. In fact, one question, a detailed one will pick up. And in that question, we'll just try to get onto the accounting requirements of both the transfer company and the transferee company. We'll look at the journal entries, everything will cover. Okay. Pratima is asking, sir, in the merger method, both the values, yes, they will go to journalism. Right. Kiran is asking, sir, if the debentures are given to the equity shareholders, then will it form part of purchase consideration? See, as I told you, that any consideration which you give to equity shareholders, yeah, that will form part of purchase consideration. See, generally in the question, let me just clarify. Generally in the question, what will you find? That the transferee company settles the debenture holders of the transferor company. Okay. Generally, you'll not find in the question that the transferee company is additionally issuing debentures to the shareholders. Okay. So far, you would not have found that. But if that happens, will that form part of purchase consideration? Yes. What will not form part of purchase consideration is settlement of debenture holders of the transfer company. Clear? Srinivasan has a question. Yes, Srinivasan, please go ahead with your question. I think you'll have to repeat your question. Kiran seems to be clear on this. Yeah. In the meantime, I'll just get on to that next question which we need to cover now. All right. Yes, Srinivasan. Please share your question. We'll discuss your question and then we'll move on to this part also. Anyone else? Any more doubts if you have? So we can look at this question now. Yeah, everyone clear on this? Kiran seems to be clear on this. All right. Yeah. Okay, Srinivasan, you may send your query and we'll discuss. Don't worry. Okay. Now, in this question, what do we have? Y Limited acquires business of Z Limited. Okay. And the balance sheet of Z Limited as on 31st March 2000 X1 is given. Okay. Exactly similar information which we discussed in previous example also. Okay. Means the balance sheet of this transfer company is given. Who is the transfer company? Z Limited is the transfer company in this example. Okay. Now, we are given share capital, reserves, long-term borrowings, trade payables, current liabilities, property, plant and equipment, intangible assets are given. Then various current assets are given. Then, of course, notes to accounts. So you should expect this type of information in the exam also. So you can see that all of this information is running in 2 pages. Yes or no? Yeah. All right. Yoginder has a question before we move on this. He's saying, sir, as per AS 14, what are the conditions of amalgamation in the nature of merger? Yoginder, I think you missed out, I think, a significant part of our discussion. Okay. Maybe you can just look at that separately, or maybe towards the end of our session, we can just go through that part quickly. Okay. There are 5 conditions. Those 5 conditions we have discussed, but I would request, otherwise we'll digress from this topic completely. Okay. Okay, and I think Harish has got a query. So let me just quickly discuss his query. So he's saying, if the transferee company is holding of transfer company, see, it doesn't matter whether the transferee company is the holding or not holding. Please understand the fact that at the time of amalgamation, transfer company has come to an end. Before that, whether the transferee was holding or not, that should not impact your assessment, because now we are not looking at consolidation, Harish. Okay, I think you are looking at the requirements of AS 21. Please stay on the topic. Okay, it's not AS 21. So by getting onto AS 21, you are only bringing more confusion to yourself. Okay, so please move away from that. Okay, limit yourself to AS 14 for the time being. Okay, that's how you'll get more clarity. Clear? Okay, so now further on this, Y Limited was to take over all the assets except cash and liabilities except for interest due on debentures. Okay, so Y will take over all the assets except cash, and all the liabilities will also be taken over except for interest which is due on debentures. So what is this interest due on debentures? Let's try to find out. So we can go above. So we can see that in terms of current liabilities, okay, this liability is in respect of interest payable on debentures. So this will not be taken over by the transferee company. Okay. And then it says following amounts will be paid for this takeover. 2,07% debentures in Y Limited for existing debentures in Z Limited. Okay, so Y will issue debentures to the debenture holders of Z Limited. For the purpose, each debenture of Y Limited is to be treated as worth of rupees 105. Okay. Now, moving further. For each preference share in Z Limited, rupees 10 in cash. Okay, means every preference shareholder, for each preference share, rupees 10, partly he'll get cash and partly he'll get preference shares of Y Limited. Okay. For each equity share in Z, rupees 20 in cash and one equity share in Y Limited, having market value of rupees 140. Then it says expenses of liquidation of Z Limited are to be reimbursed by Y Limited to the extent of 10,000. Actual expenses amounted to 12,500. Now, can you tell me what is the relevance of liquidation? Are we discussing liquidation here? So where does this liquidation of Z Limited come from? Can anyone explain? Over to you. So we were discussing about amalgamation, but in between amalgamation, where do we find? We are getting liquidation. So are we covering liquidation here? So where does this liquidation come from? What is the relevance of liquidation? Can someone explain? Over to you. Quickly. Can someone explain where does this liquidation come from? Mohammad is saying 2,500 is paid by transferee company, which is fine. I think Santo wants to speak. Yes, Santo, please go ahead. Yes, Santo. You raised hand. All right. Everyone, tell me. Yes, Santo. Can you please help me understand where does this liquidation come from? Very good. So Unni Krishnan is saying, sir, Z is the transfer company. Now in this case, what do we have? We have two companies, Y Limited and Z Limited. Okay. And Z is what? Z is the transfer company. Means it will get merged with Y. Okay. And Z is going to come to an end. So when the company comes to an end, what do you call it as? Liquidation. Liquidation. And that is why at this point of time, at the time of amalgamation, what is it that we will be required to do? Close the books of Z Limited. Okay. And when the books of Z Limited will be closed, what do you adopt? Liquidation. And in that liquidation, some expenses will be required to be incurred. Okay. So a liquidator will have to be appointed. That liquidator will be involved in this liquidation process. So understood the relevance of this liquidation. Where does it come from? Yeah. All right. So now it further says Y Limited valued land and building at 5,50,000, plant and machinery at 6,50,000, and patents at 20,000. Okay. So when the assets of Z are taken over by Y, what does it do? It is valuing some of its assets. Plant and machinery, land and building, patents, these have been valued. So their book value would be different. But Y at the time of takeover is saying that this is the amount at which I'll take over. Okay. Now, this is being done only for the purposes of liquidation. Please remember. Okay. This revaluation is done only for the purposes of liquidation. Clear? Now, in this case, what we will do is we will look at the accounting in the books of both the companies, transfer company and transferee company. Okay, so that is what we will try to look into. But before we get into that, I think the first step will be what? To compute the purchase consideration. First step will be to compute the purchase consideration. Okay. So now let's compute the purchase consideration. I think before we get on to that, I can see some queries coming in. So Srinivasan is asking, sir, in page number 9.32, why investment allowance is reversed and not general reserve? See, I'll have to get on to that page number, but I would say let's stick to this example first, and then we'll pick up the page numbers. Okay, maybe later on. Hopefully, after doing this, this query will automatically go away. Okay. Then I think Vidushi is asking, so can we say that amalgamation in the nature of purchase, transfer company liquidates? I would say not only in the nature of amalgamation, in the nature of purchase. In both the cases, whether it's in the nature of merger or in the nature of purchase, transfer company comes to an end. Clear? Yeah, in both the cases, it will come to an end. Clear? Okay. So now, if you compute the purchase consideration, remember the purchase consideration required settlement of three things. In fact, four things. One was the payment to debenture holders. So will this form part of purchase consideration? Tell me quickly. Now everyone needs to answer faster, please. No, Pooja is saying no. Very good. So this will not form part of purchase consideration. Preference shares, equity shares, will this form part of purchase consideration? Second and third. Mohammed is saying yes. Liquidation expenses, which will be borne by Y Limited. No. Because this amount doesn't go to the shareholders. Clear? Okay, now, for the purposes of purchase consideration, let's talk about first settlement. That is for preference shareholders. So how many preference shares do we have? So we have share capital of 4 lakh, 4,000 shares are there. 4,000 shares are there. So every share will get rupees 10 in cash. So 40,000 and 19% preference share of Y. 19% preference share of Y. So that means 40,000 will be cash and 4 lakh will be the preference shares of Y. So 4,40,000 is first part. Then the other part is around equity shares. So let's find out how many equity shares do we have? 8,000 amounting to 8 lakh. So it says every equity share will get rupees 20 cash. So that means 8,000 into 20, 1,60,000. 8,000 into 20, 1,60,000. And then it says every share worth of 140 every share worth of 140. So please calculate this. You need to calculate and share your answers. Huh? Every share worth of 140. So 8,000 into 140, what do you get? 11,20,000. Yeah. So all in all, what is the amount? 17,20,000. Okay. So 440 goes to preference shareholders. 1280 goes to equity shareholders. Okay. And total amount of consideration will be what? 17,20,000. Clear? Any questions so far? Any doubts that you have? And I would request Mr. Ajit, if you would just open this window for student to ask questions. Huh? Though anyways, we have been discussing the questions, but I think you can just open that. Huh? All right. So I'll just continue with this. All right. So now purchase consideration is what we have computed. Now, as a next step, what we will do is we will close the books of vendor company. Can you tell me which company is the vendor company? We are required to close it books. Which company is the vendor company? Y or Z? Y or Z? Which company is the vendor company? Its books will be required to be closed. Kiran is saying Z. Yes, very good. So now books of Z Limited. Vendor means Z Limited. Its books will be closed. Okay. Now let's close the books. So when the books of Z will be closed, what do we need to open? We need to open a realization account. An account will be opened. What do you call that account as? That account is called as a realization account. Now, in that realization account, all the assets will be transferred at book value. Now, you may be thinking, but sir, why is not taking over the assets at book value? No worries. So first of all, in that realization account, all the assets will be transferred at book value. Okay. If cash is not taken over by the transferee company, it should not be transferred. Okay. Similarly, if the P&L will have a debit balance, if there are some expenses which are not written off, they should also not go to realization account. They should also not go to realization account. So if you look at the reserves, in the reserves, what do you find? What type of reserves do we have? Capital reserve is there. P&L credit balance is there. It's not the debit balance. Workman compensation reserve is there, out of which 5,000 is the liability, 3,000 is the reserve. Okay, so this is 5,000 plus 3,000. So that's the split. Okay. Yeah. So now let's pass the accounting entries for this. So realization account will be debited. Realization account will be debited. Okay. And what do we credit? All the assets. All the assets. So which all assets do we have? So we have goodwill. We have goodwill 2,40,000. We have patents 50,000. Land and building, plant and machinery. Yeah. So let's move all of these assets. So goodwill, land and building. Then we have plant and machinery, patent, inventory, trade receivables. Now all of these assets have moved at book value. All of these assets have moved at book value. Yeah. Because the assets of transfer company have to now move out because the company is coming to an end. So that's why what do? Assets will be credited, and where do you move them? The realization account. Clear? Now, similarly, all the liabilities of the transfer company, they will also be moved to realization account. They will also be moved to realization account. Now, which all liabilities does it have? Debentures, debit, workman compensation reserve. Now, if you remember workman compensation reserve, one part of this was a liability. So if you go above, what do you find? That one part of this workman compensation reserve was a liability. Okay. So we are not moving the reserve part. We are only moving this liability part to the realization account. Okay. So we are moving this part to the realization account. Then trade payable. Now, at what values these have been moved to the realization account? All at book values. These are all moving at book values. Okay. So we'll debit the liabilities and credit realization account. Now, please remember in the question, you may be asked to pass the journal entries. Okay. Yeah. Now, as a next step, if you look at it from the perspective of Z Limited, now Z Limited will say that I'll receive consideration from Y. Z Limited will say I'll receive consideration from Y. Okay. So that's why what will happen? It will debit Y Limited. It will debit Y Limited because Y Limited will be required to pay consideration to Z. Okay. And we are looking at it from the perspective of shareholders of Z. So Y Limited will be debited. What is this amount? 17,20,000. Can you tell me? Where does this amount come from? Mohammed, I'll come to your query. Where does this amount come from? Mohammed is saying purchase consideration. Very good. Now, Y Limited will be required to pay purchase consideration. So that's why this amount will also move to realization account. So Y Limited will be debited and realization account will be credited. And please remember in the question, whenever you will be answering this, please don't forget the narration. Okay, so all of these narrations are going to be important. They will carry marks. Clear? Next step. Now, this purchase consideration will now be discharged. This purchase consideration will now be discharged. So how does it get discharged? So if we go above, purchase consideration comprised of three parts. One was cash. What was the amount of cash? 40,000 and 1,06,000. 2 lakhs. Very good. And what was the amount of preference shares which shareholders of Z Limited are going to get? Tell me.
4 lakh.
4 lakh. Very good. So this is going to be the second component. And third component is equity shares. That is 11,20,000. Now this will also get settled. Why? Because now Y will say, or in the books, what we will say is that let's credit Y Limited. And what do they receive? Z Limited, what do they receive? They receive cash. So they will debit cash. They will debit preference shares of Y Limited because now they are getting preference shares of Y Limited. That's an asset for them. They will receive equity shares of Y Limited. Now, all these three things are what? All these three things are assets. That's why these have been debited. Clear? Clear on this? Everyone clear so far? Any questions so far? Everyone clear? Any questions so far? Quickly, please let me know.
Okay.
Any questions?
No, sir.
No. Okay, great. Saurav is also saying no. Let's move further. Now, if you remember, there were a couple of adjustments. One adjustment was in relation to settlement of debenture holders. Second was in relation to liquidation of expenses. Sorry, liquidation expenses. Now, see, in this case, if we go back to the question, it said that Z Limited incurred expenses amounting to 12,500. Okay. And out of this 12,500, 10,000 will be reimbursed by Y. So that means over and above this purchase consideration, Y will be paying something more. What is that amount? 10,000. Y will be paying something more. That is 10,000. If the question would have said that expenses incurred by Z are 12,500, but nothing has been paid by Y. So do we need to do anything? No, simply we'll book the entry for payment of these expenses. But now a part of this is going to get reimbursed. So that's why what will happen? In the books of Z Limited, which will be closed, Z Limited will say 12,500 will go out. Why? Because this much cash has been paid. This much cash has been paid. Out of this much 12,500, 10,000 becomes receivable from Y Limited. 10,000 becomes receivable from Y Limited. And differential 2,500, where does it go? It's a kind of P&L for us. You can say it's a kind of P&L for us. So it goes to realization account. And now as a next step, we will be required to receive this cash from Y Limited. So cash debit to Y Limited. Why? Because at one place we are making Y Limited receivable. And now we will be required to close the account of Y Limited by receiving cash from Y Limited. Okay, clear on this? Now, there was one liability which was not taken over by Y Limited. Which liability was that? Interest on debentures. That was not taken over by Y Limited. So who will have to settle this liability? Tell me. If the transferee company will not take over the liability, who will be required to settle that? Does it mean that that liability will not be required to be settled? Tell me, everyone.
Transfer company will settle them.
Sorry?
The transfer company will settle that amount.
Yes. So if the liability will not be taken over, that doesn't mean that liability will not be paid. Yeah. So Pratima is also saying vendor company will have to settle. Who is the vendor company in this case? It is Z Limited. So now Z Limited will have to pay off this liability. And this liability will be paid off by paying that to debenture holders. So it will be interest debit to debenture holders to cash. So effectively, what is happening? Interest debited to cash. Okay, so this much cash is paid out. So this liability is also realization account. No, this will not be taken to realization account because this is something which has been paid out to the liability holders as it is. Okay. Some of those items which we had taken to realization account were those which belonged to the shareholders. But this amount doesn't belong to the shareholders. So that's why you may be thinking, sir, why don't we take it to realization account? Because it doesn't belong to the shareholders. Okay, clear? Okay, now as a next step, what do we do? Preference shareholders will have to be settled. Yeah. So now preference shareholders will be settled in two forms. One, preference share capital of Y Limited and 40,000 cash. Okay, so now what we will do is Z Limited will make this amount. Received this. Z Limited has already received this from Y. Now this amount has to be made due to the preference shareholders. So how does it happen? So preference share capital will be debited. Realization account in respect of cash will be debited and the amount will be made due to the preference shareholders. Okay. And then eventually these preference shareholders will be paid. So the preference shareholders will be debited and cash will be paid to them and the preference shares of Y will be paid to them. Now you may be thinking, sir, at one place we are debiting this and at the other place we are crediting this. So can you explain as to why do we debit this at one place and why do we credit this at the second place? Quickly, let me just see who can answer this. Let me just see who can answer this. Why do we need to pass this entry first before settling the preference shareholders? Over to you. Over to you. You may speak up if you want. Mohammed is saying first entry is for due ke liye. Second is for pay ke liye. But there's one more point which is attached to this. Let me just see who can answer this. Pratima is saying first we have to book the expense and then pay. No. There's one point you are missing out. Quickly, let me just see who can answer this. If you have understood this conceptually, you will be able to answer this. Sentu is saying because it shows extra amount to be debited first. No. No. There's one more point you are missing out on. Mohammed is saying realization account ke effect ke liye. No. Let's try to understand. See, if you look at the books of Z Limited, in the books of Z Limited, preference share capital is outstanding as a credit balance. Yes or no? In the books of Z Limited, preference share capital is outstanding as a credit balance. Yes or no? Now, if you have to remove this preference share capital, how will you remove it? By debiting it. By debiting it. So in this case, what are you debiting? 6% preference share capital of Z Limited. 6% preference shares of Z Limited. So in this case, what is getting debited? Preference share capital of Z Limited. Okay, I think Harish has answered this. Okay. Now, in the second entry, if you look at this, what is getting credited? What is getting credited? Preference share capital of Y Limited. It's not Z Limited. Please understand, something which has been debited in entry number 7. Okay, something which has been debited in entry number 7 is different from what is credited in entry number 8. Clear on this? And if you go above, you may be thinking, but sir, now this credit balance of preference share capital in Y Limited will appear. No. If you go above, we have already debited this in entry number 4. Yeah, when you received these shares from Y, so this was appearing as an asset. So now this asset you will give to preference shareholders because you have to close the books. When you close the books, everything has to become zero. Understood this? Yeah? Clear on this? Okay. So now preference shareholders have been settled. Now at the last step, what do we need to settle? Equity shareholders will have to be settled. So now the same strategy will have to be followed. Something which we have followed for preference share capital. So equity share capital of Z Limited will have to be debited. Capital reserve will have to be debited. P&L balance will have to be debited. Workman compensation reserve, the reserve portion, only the reserve portion. It's not 8,000, it's 3,000 will have to be debited. And what do you credit? Equity shareholders. Equity shareholders, the differential goes to realization account. And now these equity shareholders, they are going to get settled. They are going to get settled, and they will get settled in two forms. They will get settled in two forms. One is through the equity shares that they are going to get, and second is the cash. Now you may be thinking, sir, where does this cash come from? Now for this, every time in the question, you will be required to prepare two things. One is realization account, and second will be cash account. Otherwise, chances will be that you make the mistakes. Okay. So all of these entries that you have done, you will have to post this in realization account. So sundry assets, you will post here. Sundry liability, you will post here. Purchase consideration, you will post here. Cash expenses, which we took to realization account. Preference shareholder settlement cash, which you took to realization account. Now, you will have to close this realization account first. So at first place, what do? You will close this realization account. So if this realization account will be closed, it will either result into a profit or a loss. It will either result into a profit or a loss. Now, in this case, this is the balancing figure. This is the balancing figure. Sorry. This is the balancing figure. And where do you take this balancing figure? This will go to equity shareholders. This will not go to preference shareholders. This will go to equity shareholders. 3,82,500. And this is what you will post over here. 3,82,500. Clear? Clear on this? So where does it come from? It comes from working note number 1. This is how you should also give the reference in the question. Okay. Then further, cash account will also be prepared. Now, See, for the purposes of our discussion, we looked at the accounting entries and then we looked at these two accounts separately, but you will have to do this simultaneously. Okay. So now cash account, you'll start with the opening balance. Okay. Then liquidation expenses were paid, net 2500 because 10,000 were reimbursed. Yeah. Because 10,000 were reimbursed. Yeah. Then this consideration came from Y Limited for 2 lakh. Then this 10,000 came from Y Limited. Yeah. Debenture holders were paid. Preference shareholders were paid. Yeah. And these liquidation expenses got sort of knocked off. Okay. These were knocked off. Why? Because 10,000 came and it went out. So it's sort of contra entry. So now in this case, the balancing figure of cash, which will remain, it will be distributed to whom? Equity shareholders. Why? Because at the end, anything which gets left out will be given to whom? Equity shareholders. So if it's a loss, it will go to equity shareholders. If it's a gain, it will go to equity shareholders. If there is a cash surplus, it will go to equity shareholders. Okay. So now this cash surplus, where do you take it? Over here. So this is how books of the transferor company, in our example Z Limited, will be closed. Okay. So in the next session, what we will do is we will continue on this example. We will continue on this example and we will look at as to what will be the accounting which the transferee company will do. So please remember that today in this example, we have only discussed the closure of books of transferor company Z Limited. In the next session, we will continue with this. In the next session, we will talk about accounting at the time of amalgamation, which Y Limited will do. Okay. So now moving on to your queries. So Mohammed is saying, sir, एक doubt है, 140 मार्केट वैल्यू पर इश्यू है, तो इसमें प्रीमियम ऐड है 40 का. Yes, इसमें प्रीमियम ऐड है. So when we will move on to that part, okay, so when we'll move on to the accounting requirement of Y Limited, that is when you will get clarity. So don't get confused. So you're thinking, sir, security premium क्यों नहीं आ रहा? I think this is your query. So you'll get the clarity. Yeah, don't worry. You will get to see everything. Okay, so then I think Harish is having a query. Sir, if the cash balance is also taken over, so where will the difference go? See, if the cash balance is taken over or not, irrespective of that, you will prepare the cash account. At the end, this cash account has to become zero. Yes or no? Because when the books of accounts are closed, everything will have to be settled. And this is how this settlement will have to happen. Then I think Srinivasan has a query. He's saying, sir, in page number 32, sorry, 9.32, I understand you are talking about study material. Is it? Yeah. So 9.32, I'm not sure which document you are referring to, because I think Srinivasan, you'll have to specify. Yeah. So which document you are referring to? When you say 9.32, what does it mean? Okay, and which version are you really referring to? I think you'll have to clarify that point. Anyways, you can just make a note of that point. I'll just go through that document, and if not answered by now, if let's suppose, okay, I'll come back to you on this. But as of now, I'm not sure which book, which document you're referring to. Okay. Anyone else? Any more questions? Any more doubts? I understand we have just stretched a bit, but any questions, any doubts, if you have, please let me know. I think Pooja has raised hand. Yes, Pooja, please go ahead with your query.
गुड मॉर्निंग सर.
Good morning, Pooja.
सर मुझे ये जानना था कि जो मतलब मर्जर में हमें कैश लेना कंपल्सरी होता है या नहीं होता है?
पूजा, मर्जर में कैश लेना ऐसा कोई कंपल्शन नहीं होता है, बट आई वुड से लेट्स वेट फॉर सम टाइम. मर्जर रिलेटेड अकाउंटिंग रिक्वायरमेंट, परचेज रिलेटेड अकाउंटिंग रिक्वायरमेंट, differences between these two. So there are a lot of adjustments which you need to consider at every point of time. That part is still pending. Okay, so that part will cover in the next session. So in the next session, we'll talk about both these things and we'll pick a full-blown question which will deal with accounting requirements of all of these things. Okay, so I would suggest please wait for this next session. You'll get absolute clarity around each and every point over there. Okay.
जी सर। सर मुझे ये भी जानना था कि जैसे हम गुडविल या कैपिटल रिजर्व कैलकुलेट करते हैं, तो उसमें हम नेट एसेट लेते हैं। तो नेट एसेट में जैसे डिबेंचर होता है, तो डिबेंचर को हम मतलब उस वैल्यू पे क्यों लेते हैं जिस वैल्यू पे ट्रांसफरी कंपनी मतलब उस डिबेंचर होल्डर को डिस्चार्ज करती है, जबकि वो उसे लेती तो सर बुक मतलब उसी एग्रीड वैल्यू पे है, जो भी मतलब अग्रीड वैल्यू होती है उस वैल्यू पे ट्रांसफरी कंपनी से टेक कवर करती है, एंड उसे डिस्चार्ज वो मतलब अपने उस पे करती है। तो जब हम नेट एसेट कैलकुलेट करते हैं तो उस समय पे वो डिस्चार्ज वैल्यू को क्यों लेते हैं सर, जब हम गुडविल की कैलकुलेशन करते हैं उस समय पे?
ओके, देखो, लेट्स ट्राई टू अंडरस्टैंड इट दिस वे. Say uh, let's suppose you have got a laptop, Pooja. Okay, I'm just just trying to give you the context. So let's suppose you have a laptop today. Okay, now the book value of the laptop which you have is 40,000 rupees. Okay, fine, Pooja.
यस सर।
Now let's suppose if I agree to take over this laptop from you at rupees 50,000. I understand that in your books of accounts you are keeping that laptop at 40,000. Okay, there's no doubt about it. But for me, the worth of this laptop could be more. Or I may be thinking, no, in the market, if I'll go, I'll be getting this laptop at 1 lakh. So better buy this from Pooja at 50,000. Okay. Now, in this case, if I look at it from your perspective, what are you getting? Are you getting the value of the laptop or over and above that? Are you getting only the value of the laptop or something over and above that?
सर 50,000।
Sorry?
सर 50,000 मतलब ज्यादा अमाउंट
सो
होगी।
सो आप ज्यादा मिल रहा है, आप तो आपको अपने लैपटॉप की वैल्यू भी मिल रही है और उसके अलावा कुछ ज्यादा भी मिल रहा है, करेक्ट?
राइट सर।
सो ये जो आपको ज्यादा मिल रहा है, क्या आप ये बोलोगे लैपटॉप की वैल्यू मिल गई? सी, मैंने एक एग्जांपल डिफरेंट ले लिया, बट मैं आपको कंसेप्ट समझाने की कोशिश कर रहा हूं. सो ये जो आपको एक्स्ट्रा मिला, ये मेरे लिए क्या है? मेरे लिए, मैंने बोला कि ये गुडविल है. तो अब इसको बिजनेस से रिलेट करते हैं. मान लो आप एक बिजनेस चला रहे हो, पूजा. ओके, एंड द वैल्यू ऑफ योर बिजनेस इज 40 करोड़. आपके बिजनेस की वैल्यू 40 करोड़ है. वाई? बिकॉज बुक वैल्यू देख लेते हैं, आपने अपना बैलेंस शीट बनाया एंड द बैलेंस शीट वैल्यू ऑफ योर बिजनेस वॉज 40 करोड़. But I came over. I said, Pooja, I want to buy your business and I'll pay you 50 crore. You are happy. You anyways don't want to continue with your business and you are getting good value. So we'll say, okay, I am happy to pay this. Sorry, I am happy to sell this business. So now in this business, there are two things you are getting. One, you are getting the value of the business and setting over and above that. अब ये over and above that क्या है? See, in the business which you have created a value. It's a running business. So if I were to set up this business, I would need some efforts. I would need to create a brand. I would need to create the customers. इन सब की वैल्यूएशन भी तो एक चीज होती है. सो उसके लिए द एडिशनल अमाउंट विच आई पे, व्हाट डू यू कॉल इट एज? गुडविल. But at times it may happen. Let's suppose your business is running into losses, Pooja. Okay. Let's suppose your business has a book value of 40 crore, but it's running into losses. You don't want to continue with this business. Okay. You want to move out of this business. Fine. And luckily I come over and I am happy to buy your business at say 25 crore. And you are in stress because you need funds. So you are highly debted. बहुत आपके ऊपर कर्जा चढ़ा हुआ है, आप फंस गए. सो इट्स अ डिस्ट्रेस सिचुएशन फॉर यू. सो डिस्ट्रेस में क्या आप उसको बेच देते हो कभी कभी? टेल मी. डू यू एंड अप सेलिंग दैट और नॉट? टेल मी. टेल
तो
मी,
कर
पूजा. यस, इट हैपेंस और नॉट?
हो जाता
सो
है।
इन दैट केस आपको अपने बिजनेस के बदले में सिर्फ 25 करोड़ मिले, बट मेरे को एक अच्छी डील मिल गई. मेरे को एक बिजनेस कम वैल्यू पे मिल गया, तो मैं उसे क्या बोलूंगा कि बिजनेस तो आ गया 25 करोड़ का और 15 करोड़ का मैंने एक रिजर्व और कमा लिया. मैंने एक बेनिफिट कमा लिया ना साथ साथ. So benefit is a kind of reserve for me. So this type of reserve is what you call as capital reserve. Now, how is it possible? So let's suppose if I take over your assets at book values always and not at the agreed values. Like in first example, my agreed value was 50 crore. In second example, my agreed value was 25 crore. So will I be able to ever know this amount of goodwill or capital reserve? Tell me. Tell me. नहीं पता लगेगा ना पूजा? Yes or no? फिर कभी नहीं पता लगा पाएंगे ना? Yes or no? Tell me quickly.
ये सर नहीं पता।
That is why these amounts are taken at agreed values. Okay? Clear on this now?
सर ये तो मुझे समझ आ रहा है कि अग्रीड वैल्यू पे हम डिवेंचर होल्डर्स से लेते हैं, तो हमें
नहीं,
नेट
नॉट फ्रॉम द डिबेंचर होल्डर्स। एग्रीड वैल्यू पे हम बिजनेस को टेक ओवर करते हैं, नॉट फ्रॉम द डिबेंचर होल्डर्स। हाँ प्लीज, डिबेंचर होल्डर्स से तो हम एग्रीड वैल्यू पे कुछ भी करते हैं, वो एक अलग एस्पेक्ट है। आई एम टॉकिंग अबाउट शेयर होल्डर्स राइट नाउ।
ये सर मैं उसी के बारे में बात कर रही थी, जैसे कि हमने बिजनेस, जैसे हम बिजनेस परचेज किया तो उस टाइम पे जो डिवेंचर है वो हमने अग्रीड वैल्यू पे लिए, मतलब बिजनेस से अग्रीड वैल्यू पे लिए। एंड हम गुडविल की जब कैलकुलेशन कर रहे हैं तो उस टाइम पे जो हम डिवेंचर होल्डर को डिस्चार्ज कर रहे हैं, मतलब जिस वैल्यू पे हम डिवेंचर होल्डर को पे कर रहे हैं वो वैल्यू हम उसमें कंसीडर कर रहे हैं सर। मैं ये मतलब
नहीं, वो
थोड़ा
हम
डाउट
कंसिडर नहीं कर रहे हैं। देखो, हमारे परचेज कंसिडरेशन के अंदर जो हम डिबेंचर होल्डर को दे रहे होते हैं वो हम कहाँ कंसिडर कर रहे हैं? गो बैक टू आर।
परचेज कंसीडरेशन के लिए कैपिटल रिजर्व या गुडविल निकालते समय की बात कर रहे हैं सर।
हाँ, तब भी नहीं कर रहे हम उसको, तब भी नहीं हम कर रहे। हम सिर्फ
पता नहीं
वो
सर क्वेश्चन में दिया हुआ है इसीलिए मैंने आपसे पूछा।
नहीं, वो देखो, हम वो लाइबिलिटी को कंसिडर कर रहे हैं, वो डिबेंचर होल्डर्स की सेटलमेंट को कंसिडर नहीं कर रहे। दे आर टू डिफरेंट थिंग्स।
सर
दे आर
ये
टू
अलग।
डिफरेंट थिंग्स। ओके, एक है लाइबिलिटीज। जब हम बिजनेस को टेक ओवर कर रहे हैं तो बिजनेस को टेक ओवर करते टाइम हमने डिबेंचर को भी टेक ओवर करा। तो डिबेंचर, देखो, एक बिजनेस के अंदर दो लाइबिलिटी है, एक है सन्ड्री क्रेडिटर और एक है डिबेंचर। तो ये कहना कि मैं सन्ड्री, तो हम सन्ड्री क्रेडिटर को भी तो हो सकता है कम पे करें या ज्यादा पे करें, ऐसा भी हो सकता है। ये जरूरी थोड़ा ना हम सिर्फ डिबेंचर होल्डर को ही कम या ज्यादा पे करेंगे, वो तो किसी भी लाइबिलिटी को हम कम या ज्यादा पे कर सकते हैं।
मैं वही
सो
जानना चाह रही थी कि वो उस डिस्चार्ज वैल्यू पे क्यों ले रहे हैं, क्योंकि एक बुक में क्वेश्चन है जिसमें उन्होंने डिस्चार्ज वैल्यू पे नेट एसेट का कैलकुलेशन किया हुआ था।
देखो, मैं आपको वही तो समझा रहा हूं क्यों ले रहे हैं। क्योंकि जो उसकी रियल वर्थ है, वो रियल वर्थ क्या है? हमने बात करी 40 करोड़ का बिजनेस था, 50 दिए। ओके, तो मेरे लिए जब मैं एक्वायरर हूं, मैं एक्वायरर हूं ना, मैं आपके बिजनेस को खरीद रहा हूं, मैं ट्रांसफरी हूं, तो मेरे लिए उसकी रियल वर्थ कितनी है? वो तो एग्रीड वैल्यू के बराबर है ना। बुक वैल्यू तो वो है जिसपे आप अपनी अकाउंटिंग करते आ रहे थे। Book value is not the one which was the real worth for me. So that is why I am happy to pay you more or less. So if let's suppose I am discharging your liability, whether it is a trade payable or a debenture, it may be at lower amount or higher amount. So that is what is you call as a real worth. प्लीज
ओके
ट्राई टू अंडरस्टैंड। ओके,
ओके
सो हम
सर।
रियल वर्थ पे जाने की कोशिश कर रहे हैं। इफ यू हैव टू गो टू द रियल वर्थ, हाउ डू यू अचीव इट? बाय गोइंग टू द एसेट्स एट देयर एग्रीड वैल्यूज, सिमिलरली बाय गोइंग टू द लाइबिलिटीज एट देयर एग्रीड वैल्यूज, और दिस विल अप्लाई टू ऑल द एसेट्स, ऑल द लाइबिलिटीज। सो डोंट थिंक कि सिर्फ डिबेंचर्स में ऐसा किया है, हर एसेट हर लाइबिलिटी पे ये होगा। So if you'll visit all of those questions which are given in the book, or maybe anywhere you read, everywhere you will find this adjustment in relation to every asset, every liability. Clear?
ओके ओके सर। सर एक और क्वेश्चन था लास्ट क्लास से रिलेटेड है सर। जिस
Yes.
सर मुझे जानना था कि जैसे डिविडेंड है या इंटरेस्ट है, ये तो अदर इनकम का पार्ट होते हैं सर। मतलब
Right.
जब हम फाइनेंशियल स्टेटमेंट बनाते हैं तो अदर इनकम के अंदर आते हैं डिविडेंड
Right.
या इंटरेस्ट, या फिर सर ये रिवेन्यू का पार्ट भी बनते हैं तो उन कंपनीज के लिए बनते हैं जो फाइनेंस से रिलेटेड होती है, मतलब जो फाइनेंस का वर्क करती
Exactly.
है। तो ये
Exactly.
जो हमने मतलब AS9 पढ़ा है डिविडेंड और इंटरेस्ट के रिगार्डिंग, तो ये फाइनेंस कंपनी से रिलेटेड मतलब डिविडेंड की ट्रीटमेंट के लिए होता है या फिर मतलब सबके लिए होता है?
Okay. So I'll explain it in a different manner. See, it's not about कि ये फाइनेंस कंपनी के लिए होता है, किसके लिए होता है। सो देर इज अ ट्रांजेक्शन। कौन सी ट्रांजेक्शन है? डिविडेंड की। अब डिविडेंड को कंपनी को कैसे रिकॉर्ड करना है? समवेयर यू नीड द गाइडेंस फॉर दिस और नॉट? अब वो गाइडेंस आपको कहां से मिलेगी? कहीं ना कहीं तो अकाउंटिंग स्टैंडर्ड विल हैव टू डील विद दैट. So AS9 deals with that transaction, with that arrangement. So इसकी guidance चाहे वो फाइनेंस कंपनी पे हो चाहे नॉन फाइनेंस कंपनी पे हो, where is this guidance got documented? That is covered by AS9. So that is how you need to look at it. चाहे वो अदर इनकम बने चाहे वो रेवेन्यू बने, डोंट गेट कंफ्यूज्ड बाय दैट. सो यू शुड नॉट थिंक कि अगर AS9 है उसका नाम तो रेवेन्यू रिकग्निशन है, वो डोमिनेंटली रेवेन्यू रिकग्निशन की बात करता है, बट ये तो अदर इनकम है तो वो उसको क्यों डील करता है? कर रहा है वो, कर रहा है वो. सो इफ यू गो टू आर डिस्कशन ऑन AS11, रिमेंबर आर डिस्कशन ऑन AS11, remember our discussion on AS11? Pooja, are you there?
Yes, sir.
In case of AS11, there was a concept on forward contracts that we discussed.
Yes, sir.
क्या फॉरवर्ड कॉन्ट्रैक्ट का कोई भी रिलेशन है विद द फॉरेन करेंसी ट्रांजैक्शन? टेल मी, टेल मी. नो, forward contract has got nothing to do with the foreign currency transaction. It may be in relation to that, but forward contract अगर हम आज करते हैं तो क्या हम ये कहते हैं it's a foreign currency transaction? No, but that guidance has been incorporated over there. Okay, so why? Because it's linked to foreign currency transaction, and that's why AS11 was considered to be the appropriate standard wherein such guidance can be specified. Same goes with this dividend or interest income or royalty. Understood?
सर एक और क्वेरी थी कि सर जैसे कि हम जो फाइनेंशियल स्टेटमेंट बनाते हैं वो अप्रूवल बेस पे बनाते हैं, लेकिन डिविडेंड की जो मतलब हम मतलब वो उसी ईयर के लिए तो नहीं होता है सर, तो ये गलत नहीं हो जाता है? क्योंकि डिविडेंड जिस समय डिक्लेयर किया जाता है तो उसी समय पे किया जाता है, तो ये तो अलग हो गया ना सर, अप्रूवल कॉन्सेप्ट मैचिंग कॉन्सेप्ट तो नहीं हुआ.
So I would suggest one thing, maybe you need to revisit AS4. Okay, AS4 you have covered.
Yes, sir.
I would suggest please revisit that AS4. Just go through that the requirement of AS4 once again, because there is a concept of adjusting and non-adjusting event. Okay.
Yes, sir.
In the light of that discussion, just relook into this requirement. Okay, कि ये गलत तो नहीं हो जाएगा, एक्रूवल के कंसेप्ट को हम बीट तो नहीं कर रहे हैं. Once you go through these two things, then come back to me. Okay, maybe then you let me know if you still have a doubt, because I think you'll have to mix up these two things. See, please remember that accounting concepts are quite interlinked, and all of these accounting standards, they have got a lot of linkages at times. Yeah, so every time the accounting is not done on a solo basis wherein you just read one concept and you think, okay, so ये क्यों नहीं हो रहा, ये क्यों नहीं हो रहा, और ये क्यों हो रहा है. So there are a lot of linkage which is involved. So with that linkage, I think you should look into this point. So once you go through that requirement of AS4, you should get some more clarity around it. If you don't get it, then we'll discuss that. Okay?
Okay, sir. Thank you, sir.
Sure. All right, so I think students may be thinking that I've stretched this session a bit, but I think that is why we are here to discuss and deal with your queries. So I think we can conclude our discussion now. And in the next session, we will continue with this discussion on the amalgamation. And please remember, we'll also be starting on the next topic, that is about consolidation. So please come prepared with consolidation, particularly on AS21. So I won't say that AS23 and AS27 also you should cover. It's better if you good it, but at least AS21 you should cover. Okay, yeah, everyone, and we'll continue on this.
Thank you, sir.
All right. All right, thank you. Bye.